Welcome to the Gamma Brief. It is Thursday, August 20th, 6:45 a.m. Eastern. If you're new here, the Gamma Brief is an experiment using a layered generative AI pipeline. Check out the explainer video or reach out if you would like more details about the setup. Also, I'm collecting feedback about what should be included in the 2.0 version. What do you like? What isn't helpful? What could be added? Share your thoughts and ideas here or using the contact form at gexlog.com. And a reminder, Gamma Brief is market intelligence, not financial advice. All right, let's get into it. ES futures are trading at 7,726. Our prior call warned that momentum would run unhedged, but the session stayed range bound and the walls held firm. If today's gap holds, then dealer positioning will force the expansion we expected yesterday. The regime remains entrenched in negative gamma for the third consecutive session, anchored by negative $3 billion in net dealer positioning. Cumulative GEX stays negative across the entire observable chain, meaning no in-range flip exists to stabilize price action. VIX is hovering at 15.16, failing to compress overnight, which aligns with today's trend potential forecast. In plain English, dealers are net short options and will hedge by buying into rallies and selling into dips, structurally amplifying any directional momentum. The options market is priced an expected move band of plus or minus 74 points from the cash close, setting an upper bound at 7,782 and the lower bound at 7,634. ES currently sits exactly in the middle of the neutral zone, 27 points above the 7,700 put wall and 27 points from the 7,755 call wall. If the overnight gap holds, the buffer remains balanced. If the gap fades, the buffer to the put wall shrinks to just 8 points, placing dealer gamma support under immediate threat of a breakdown. Overnight positioning was dictated by the U.S. Treasury doubling its long-dated bond buybacks. This intervention pulled the 30-year yield down to the 5.2% range and compressed the 10-year yield by 6 basis points, providing relief to risk assets. The resulting equity bid is highly rotational rather than broad-based. Healthcare led the tape up 2.2%, while technology lagged, dropping 1.4% as capital reallocated. No high-impact events are scheduled before the opening bell, meaning the pre-market regime read carries directly into the session without caveat. At 8:30 a.m. Eastern, we receive a cluster of medium-impact data drops, including the initial jobless claims and the Philly Fed Manufacturing Index, followed by the leading index at 10 a.m. The environment is consistent with directional momentum expressions that capitalize on amplified moves. Selling premium inside the neutral zone here is picking up pennies in front of a steamroller. Negative gamma punishes range-bound assumptions. Defined risk directional structures are built for this environment. Holding above the 7,700 put wall triggers the primary plan to lean long toward the 7,755 call wall. Invalidation occurs on a clean break below 7,700, which flips the downside read toward 7,690. The structural setup favors trend potential as dealers remain uniformly short gamma. Watch the 7,700 put wall. A failure there shifts the tape from a rotational grind into a volatility expansion. Yesterday's read didn't hold. Respect levels, not the narrative. Level set, buys defined. Good luck out there. Standard disclaimer remains. Gamma Brief and Gexlog are market intelligence, not financial advice. Options are high risk. Manage your size and trade your own plan.